Welcome to TradeTheMBI.com. This is John. This report is for the 31st of January here. We're going to end the month slightly ahead of where we started, which was about 100 points from where we are now. And we just had a little back and forth, nothing major. We can see that this move expected because we had the positive extremes going back to right about here. Pretty much where the month started. So this breakout move, filling back towards the ABM yellow. Not a surprise if it continues through, though we will have a little bit of softness, but nothing dramatic because we're still not seeing any real major short activity. We did get the DOC spread, which is reflective of this slight decrease in energy, if you want to call it the momentum of the move, and healthy from that standpoint. There's just a lot of back and forth as far as where the Fed goes and things like that. But as we've talked about, with treasuries and those kinds of issues, the balance is still equities and risk. So no question about that. From a Nasdaq standpoint, getting closer to filling that back a little bit quicker, and we saw some weakness in a couple of the big tech moves, and not surprising, they're way, way accelerated for the given mobility of where things are economically. And from a Treasury standpoint, yields continue to drop here. The Fed's supposed to speak, and everyone's expecting that they're going to say that they've ended their idea of tightening, which sounds beautiful, and that's wonderful as long as this is not something that's out of control, because oil puts a damper on that. And we've had a nice little span of softened period, but with global tensions in that, there's that potential. And again, this is that fear element where you continue to drive forces higher because you get that slow climb into the fear of what could be, but what really isn't happening just yet. From a euro standpoint, and no activity. And again, as euro will always be affected by the oil price because it has to be translated into dollars, and that's the biggest drain on any system right there is the energy costs. Gold standpoint, that's going to continue to do a soft ramp. I think it's just going to be back and forth. It just becomes a question of any acceleration in both global tensions and or oil prices, and I think you definitely see an inflationary pressure. Not to mention budget, of course. With the U.S. announcing that they don't need as much money this month or next couple months, but we know how dramatically that can change. And of course, there's going to be all sorts of funny stuff with an election year. Bitcoin in that, so the crypto space, mimicking what we see from the commodity side of things, which this is really what it acts as. And as you get closer to ETF approval, this and that, I think you're going to get some wild fluctuations, particularly as you get towards the halving coming up. From an ETH standpoint, a little bit softer, and we've seen the proportional weakness of ETH. It had that spurt where it caught up to Bitcoin, and then it faded a little bit more dramatically, and I think that's just going to continue as the space matures. I mean, this is sort of like the early days of internet and that whole development. Of course, you're talking about a crypto; it just becomes an alternative store of value, which is the concept. And I think it will continue to play as governments get more involved in it. And that balancing act between the two is really going to be the interesting aspect of it. So from our 50K, we just had this sideways move along the 76. And then once we had the breakdown below that 25 level, it always accelerates, and it was clean from a DOC spread standpoint that we saw right here as it broke below the 76% and continue. Now we're at the 50, and we need some positive move here from DOC Steel. Not enough yet to change the MBI weight lead. So as long as that remains the case, we'll have continued breakdown below the 50, but a move back above the 50, and I think that becomes an easy reference point for turning things around. And I think it's a lot of it's going to be in news. You can see where we're at in the pre-market. From where the start was, we had a brief period early where things broke up here in the aftermarket session, and then right now, prior to the open, testing lows, see how much supply there was. If we go back to yesterday, just pretty back and forth, nice little ABC move up and down, back and forth, and then it was at the end of the day that the sell triggers took place just as a hedge to secure gains. I think going into the uncertainty of what the Fed will actually say, and that drop off continued, and so we're seeing a slight continuation of that. I don't think it's anything dramatic. In fact, I think it's completely normal and what we were expecting, because at the end of the day, you need to have those fillbacks in order to justify the move. And I think that actually enhances its ability to be sustained if economic conditions continue. And of course, that becomes something that we constantly watch. So we'll be on the lookout for it. As always, the indicators for February will be coming out, and I think that we'll probably start getting into the season where we have a bit more volatility as some of these things come to fruition and we develop more into election mode, which generally is positive for markets, but because everyone tries to put on a rosy face. So we will follow the readings as they come and go from there. As always, though, trade well. Have a good one.